Hey there, we're in the screen. Welcome to Be the Boss of Your Money. This is my live stream about personal finance, stock market updates. My name is Mitch Goldberg. I live stream every Monday through Thursday at 4:30 p.m. It's all educational. Your time is very valuable, and I greatly appreciate that you chose to spend some of it with me. Today's big announcement is inflation. We finally have a lot of inflation, and we've been talking about that. We have a situation where it's the real world, because I'm like you, folks. I am just like you. I pay in the real world. I pay for my food, my gasoline. I filled up both tanks of gas in my car over the weekend. I was like, oh, yeah. So I'm like you. I buy my food in the supermarket just like you. I like to go to a restaurant. I'm paying the real world prices. But this is a battle between the real world and the world of finance, because they're both really looking at the same inflation numbers, the same coin, but from opposite sides. So we're going to talk about that, what the market's doing to show you how it's reacting and what the real take is on inflation, and a couple of Fed announcements. We've got a lot to go through. It's going to be really interesting. We're taking a deep dive into inflation. We're going to talk about stagflation, and I'm going to give you a view of inflation that you're just not going to find anywhere else. I'm going to explain this to you in about 20 minutes, maybe a little bit less. It's going to be so good. I am pumped. So here we go. Let's roll the quick intro. We've got a great show. I'm really pumped for this. Here we go. Okay, we are back. Just fixing a couple of things. Okay, and I just want to make sure that everybody out there can hear me. And I am really excited to have you with me. And there we go. I have everything set up. I go from Zoom to live stream, sometimes Skype, and it's always a little change between what mic, how the settings reads the mic or the cameras. It's always something like that. So I am really excited for the show. We're going to take a deep dive into all of this stuff. We've got Matt out there, Matt Klavansky. Thank you so much, Matt. Matt is a great guy. I've known him now for, I think, a couple of years now, right? We've gotten to know each other. Thank you for your support. So Matt is out there. Thank you. There he is. There's a picture, Matt. That picture does not do him justice. Matt is so large, he has trouble fitting through doorways. He is just a muscle man. And Eric is out there. Love the intro. Thank you very much. Hey, man, give me a call sometime. I'll tell you exactly how I made the intro. I could make you an intro too if you want, just because, we're all in this together. Okay. Thank you so much, Eric, for joining me. We're talking about inflation and what's going on in the world. Okay. So it's time to acknowledge that inflation is probably not just a passing phase. The word transitory might not be the right word. Maybe intermediate term inflation is the word we need to use. But there's always a but. We are right now at about peak inflation year over year, because last year about this time was the low in inflation number. So comparing this year to exactly a year ago really gives you a big and distorted view of year over year inflation, from complete shutdown to massive reopening and demand shock while there's a supply shock. So we have we're literally comparing two ends of the spectrum from a year ago during the pandemic shutdown to now. And the real tell is going to be, how is inflation going to play out over the next 2 or 3 months? And that is what will determine what the Federal Reserve does in terms of starting to taper its bond buying program, and maybe even getting to talking about interest rates a little bit sooner. And that is what this show is about. So I'm going to put you up on my screen here. I'm going to show you. Let's recognize as camera 4. Let's run to that. Pop myself up in the upper corner. By the way, while you're watching this, whether in the live stream or in the replay, if you have any questions about inflation, any of the topics you're talking about or personal finance in general, go ahead and ask me. Now is the time to ask so I can give you the answer. I love hearing from you. It's my favorite part of doing this. And words of wisdom, words of encouragement are always appreciated. And maybe let me know where you are while you're watching this. That's always pretty cool to see that as well. But as you can see here, the Dow is down 107 points. NASDAQ was off, nothing crazy. S&P was off, nothing crazy. Considering the amount of inflation, the giant inflation figures that we got today and way above expectations, I'm actually pretty impressed with how well the stock market and the bond market, for that matter, held up. Yesterday, we hit record highs, and now we're just backing off just a slight bit from record highs. But I just want to do a quick acknowledgement out here. Peter is out there. Dawn is out there. I will put your comments up on the screen momentarily. And yes, Dawn, we'll get through this. Absolutely. Okay, so let's take a look at gold. Was barely up. Gold is up 0.116%. I mean, that's like, it's up $2 per ounce, right? That is nothing considering the inflation figures we got. Energy continues to go up. So that was up to about 75, 76, back off to 72. Now it's back to 75. It's tough to see a break in energy, but energy stocks don't seem to be going anywhere. And I think there's partial worry that supply will come back on stream with U.S. shale drillers. Plus, if OPEC plus, that's OPEC plus Russia, if they do finally announce a deal that they can all start pumping out more oil, you'll probably see the cost of oil per barrel plunge on that news. Okay. The world doesn't have with oil, it's not so much a supply problem. We have plenty of oil. It's just that OPEC plus is being very disciplined, and so are the shale drillers. And a lot of producers have shut down production because of the economic shutdown, and they just haven't ramped up production that quickly because they want to see how durable the recovery is. And now that the recovery is proving to be pretty durable, now supply should start catching up to demand. I can't tell you what day that's going to happen, unfortunately, but I do expect it to happen. The VIX was only up a little bit. It's up 6%, up 90.95, but that's not a lot. That's typical for the VIX to have 5%, 6% moves on a daily basis. Lastly, the Russell 2000 was off almost 2%. If the Russell 2000 is off, that means small cap stocks are down. Small cap stocks are a good indicator of the U.S. economy. Okay, so let's just show them out there. Peter is out there. Hey, Mitch, thank you, buddy, for joining me. You're a good friend. I don't know if I'm going to see you tonight, Peter. I'm going to an event tonight, which is why I'm wearing one of my favorite shirts. I'm going to a casino night that benefits ACLD, which improves the lives of adults and children with disabilities, cognitive disabilities, autism, mentally challenged, that sort of thing. And my own son is a resident of one of their homes. So this is a very special night for me, and I'm really looking forward to it. And I'm going to have a lot of friends there. So this is like the first big event that I'm going to in like a year and a half. So this is like a big deal for me to go to. And yes, Dawn is out there. We'll get through this. I love that lizard that you showed on Facebook yesterday. So cute. I have a pet lizard. I have a bearded dragon who's super, 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 super cute. Okay, so, and let's take a look at, let's go back to my other screen here, pop myself up here. All right, so let's take a look at treasuries. The 10-year treasury, which is to me the most important thing to look at, was barely up. It was 1.38, 1.37, 1.35. It's 1.41%. If so many people are worried about inflation, then why isn't the yield on the 10-year treasury going up? All right. So this is what I mean. It's a real world thing. You go to Costco, right, Dawn, and you find your little lizard. Yes. Oh, the Peter's out. Unfortunately, I am working. Okay. Listen, you are a residential realtor. You've got to work now. This is your Super Bowl. I mean, my father used to use an expression when I was a little kid. He used to say, make hay while the sun shines. Okay. And LOL. Yeah. Thank you very much. I'm going to have a great time today. I'm really looking forward to it. So, yep. At Costco, shopping Costco, see those prices go. But an old expression that my father used to use when I was a little kid, he used to say, make hay while the sun shines. And I was really little. I thought he was making hay like on a farm. And I always used to ask him when I was really little, did you make any hay today, Dad? And he would say, yeah. But as you get older, you realize make hay while the sunshine means make hay while the sun shines means while business is good, make sure you're out there making money, taking care of the business, taking care of your customers, because you just don't know when you're going to have this moment again. And since you're a residential realtor, Peter, this is your time. So I don't blame you one iota for not being able to make an event at this time. Maybe you'll get a little bit of a slowdown this winter. That might be a good thing, but that might be a bad thing. In the meantime, interest rates continue to stay incredibly low. Okay. Yep. Absolutely. Costco. I'm a big Costco shopper. I'm like a Costco connoisseur. Like I know where everything is in the store. I know when they're getting the new stuff. I'm an expert with the runway in the middle of the store. They have the best steaks. I mean, there's no doubt. To me, Costco has the absolute best steaks. Eric's financial advisor, by the way. Follow him on LinkedIn. He puts out incredible educational content, and he does it in a way that you understand it. Just because he's such a plain spoken guy, but he gets all the technicals. But he explains it in a way that it just sinks in. I'm telling people, go apply for the job you want right now. The chances are good you will get it. Yeah, absolutely. The chances are good. Now's the time to apply for the job. Hey, man, I'm sending you my resume, okay? Yep. Heading out to Idaho might not be a bad thing, right? It's a little crowded out here. Actually, you said it's getting crowded by you too. Okay, so let's move on a little bit. Pop the screen back up. Okay, put myself back up here. I really appreciate all of you guys sticking with me right now. Let's take a look at some of the cryptos. Cryptocurrency seems like it's losing a lot of interest in the part of speculators and investors. It just seems to be in a general drift down. I have a friend, Filippo, who's going to be joining us probably next week. He actually works for a crypto company, and he's going to explain a lot about crypto and give us the bull case as to why we should all be in crypto. I'm not going to give you either case, bull or bear. I'll just give you the risks and the rewards, right? And I just want to show you something here. Dogecoin. Look at Dogecoin. That was like the big one that it was a small one that Elon Musk touted, became a big one. It's down to 20 cents. Okay, down from like 67 cents. Imagine you bought the stock at 20, went to 67, let's say you bought it at 40 or 50 or 60 because Elon Musk touted it. And then that $60, $67 stock went down to 20. How would you feel about that? This is why I think that when people have a real humongous mega bullhorn and they talk about anything like speculative, like any crypto, I think they need to be careful and show a little bit more responsibility. Look at Bitcoin was up in the $67,000, $66,000 range. Now it's 32,000. It jumped up because crypto. Tesla's he bought $1.5 billion worth of crypto. That's not like a major deal. As it's a huge number to us, but in the world of crypto and in the world of Elon Musk, and Tesla, that wasn't really a big deal. Tesla bought $1.5 billion crypto on their balance sheet, presumably so that they could accept Bitcoin to sell cars. And then he comes out and says, it's really not ESG. It's not environmentally it's not good for the environment to mine crypto. So now we're not going to accept it. And then it plunges. It's just one of those wacky things. Let's take a look at the FANG stocks. Apple was up a little, Amazon off a little bit, but these stocks are all trading at or near their highs. Microsoft, Nvidia back to the 800s. These stocks are all doing well. One of the biggest worries in the stock market is how there's a handful of stocks pulling the whole market up with it. The breadth of the market, the number of stocks trading above their 50-day moving average while the market's going up is the lowest it's ever been in history, ever in a rally. And it's been like this for like the last couple of days when we've been hitting records. So a lot of people are saying that means people are getting out of riskier assets and they don't know what to do with their money. So they're putting their money into the top, 10 largest stocks, which includes these tech stocks. And this is what happened, though. It's reminiscent of 1999, 2000. In 2000, when the tech wreck happened, the NASDAQ kept going up. The S&P 500 kept going up. But most stocks were deteriorating, but you didn't notice it because the averages were going up and they kind of covered up the poor performance of so many stocks. They covered up the poor breadth of the market. And finally, the buying power ran out for the largest stocks. And then, what hit the fan after that? And it took 14, 15 years for the S&P 500 to come back. All right. It took even longer for the NASDAQ to come back. Imagine how, what that would be like for people today going forward. I mean, I've been in the market. I've been doing this for over 30 years. I've seen it before. It's very painful. It's very tedious. It's very painful. A lot of people give up in the stock market. The covers are pulled off and people see how many shams there were, how much speculation there was, and how many people were all of a sudden geniuses because they were making all this money in the market when it was really just the Federal Reserve flooding money into the market, or too much stimulus, or just too much investor enthusiasm. Just people got carried away, and then that goes away, and you realize, wow, so much of it was a mirage. That could be the case now. My own opinion is that is partially the case now. I can't tell you when it ends, but I could tell you that if you are someone who's getting closer to needing your money, whether your retirement, paying for your kids' college education, these things are coming up, you might want to consider pulling back a little bit. Not you specific, people could consider pulling back. I have to be careful with what I say in the live stream. All right. So that's really it. Let's just take a look at the sectors. After this, I'm going to stop sharing the screen and we're going to really get into the heart of the matter. So just bear with me, okay? I see a few out there. Michelle is out there. Josh is out there as well. It's so good to see friends out there. I really appreciate it. Technology was the winner of the day. Everything else was down. All of the other sectors. There's 11 sectors of the economy. 1 was up, 11 were down. I'm just tracking the large exchange traded funds that mirror each sector of the economy, okay, with their stocks. All right, so let's I'm not even showing you my screen. Do you want to? Are you interested in seeing the screen? Here, I'll show you this real quick. Okay. No, wait, that's not what I want to show you. This is what I want to show you. All right. So you see this? Technology was up. The ETF that represents the tech sector was up 0.41%. But all of the other sectors, consumer staples, energy, industrials, financials, real estate, they were all down. Only one sector was up and was barely up. And that just kind of shows you that today was a little bit more miserable than just what the averages showed. The averages showed that the market was down a little bit. Okay, let's get out of that. I'm going to take a second to go through a couple of comments, see if I missed anything. And then what we're going to do is we're going to go into some inflation. We're going to talk about stagflation and all that good stuff. So let's take a look here. Okay, we are full currently. Oh, okay. So no job openings. All right. Thanks a lot, buddy. Bet you if anybody else asked you to have a job opening. Nah, just kidding. My son recently invested in that. And was it Doge? Was it Doge or another crypto? Is that it? It's all fun. Listen, I think your son is about my son's age, high school. So it's all fun. My son wants to invest in all kinds of stuff. He's got a good job this summer. He's making some nice money. I can't believe how much money he's making. He's only 15. And I just hope he doesn't expect to like buy Dogecoin today and think the Lamborghini is going to show up on the driveway next week. Mitch, I really enjoy your shows. This is from Peter. Always very informative with easy to understand concepts and guidance. Thank you very much. That is a huge compliment for me. Thank you very much. Thank you, Mitch. Always appreciate your insure have to go. Okay, I got you. Take care. On site. All right, take it easy. Josh is out there. Are your teddy bears little piggy banks? Oh, you noticed the little teddy bears. Can you see them from screen too? Hold on. Bearish. So these are the bears. This is a grizzly bear from National Geographic. I support National Geographic. You see that? I don't know if you can see it. National Geographic. You know what the thing is, Eric Boyum, you're going to really appreciate this. I have a lot of countertop space behind me, and this is to the left of me, and counter space behind me. And it's just not great for the acoustics of the room for the sound treatment. But I don't want to just stuff pillows or blankets behind me. That would look terrible. Plus, this is my office. I have people coming in here. And, I don't want to just put more foam on the wall. I don't, or foamy sound treatments, those black tiles. I don't like the way it looks. So I thought about the idea of getting plushies, so I bought a couple of plush bears. And probably by Friday or Monday, I'm going to get a couple of plush bulls. And I figured instead of pillows, plush animals, stuffed animals will be a good way to absorb some of the sound, because those are great at absorbing the sound and reducing some of the echo and the sound bouncing around the room. And what better than bulls and bears? I mean, that's a great motif in my business, because you're bullish, you're bearish, and you want to get the bulls and the bears. So to my left, I'll have the bears, and behind me, I'll have a couple of bulls with the horns, and it's going to be, it's going to look really cool in sight. Idaho is full if you're from California. Okay, we're in New York, but I know a lot of people leaving California. They're heading out to Idaho. They're heading out to Texas. They're heading out to Arizona. They're heading out to Nevada. You notice I said Nevada, not Nevada, because people in Nevada like to say Nevada. Okay. Great idea. Yes. On the sound treatments, the plushies. So yeah, so that's what I'm doing. And it does make a difference. Like, I could actually hear it in my ear. I could hear the little difference that it makes. The bulls will be here in a couple of days. And Andrew, you could do full color graphic that absorbs sound. Andrew, just so everyone knows, is in that business. He creates shirts, mugs. He could create anything. You could create sound treated walls with logos and all that. So check out Andrew Janisic on LinkedIn. Reach out to him. He runs a company called Proforma, and he's a really good guy. So there you go. And Eric, tapestry works well. Yeah, tapestry would be pretty cool. So let's get into the inflation. And thank you so much, guys, for watching. I really do appreciate it. Wherever you're watching, Facebook, LinkedIn, and YouTube is where I'm streaming to. Okay. So got my notes here. So we have to acknowledge that inflation's real. We're feeling it. And the Federal Reserve, I'm not knocking. They're like, oh, don't worry, it's temporary. But it's kicking the shit out of my wallet and your wallet with inflation so high. Did I just say kicking on the live stream? I apologize for using that word. So if you look at Goldman Sachs, and JP Morgan, they both came out with blowout earnings. Stocks did not do well today. JP Morgan, part of their earnings report is because they set aside billions of dollars in reserves for losses during the pandemic, during the shutdown, in case they needed to take losses against consumer and business loans. Turns out that the loans performed better than they thought. They're able to bring back about $2.5 billion back onto their balance sheet and book that as profit. So a lot of people are saying, well, yeah, that's great, but it wasn't really an operating earnings bonanza. It was more like an accounting thing of moving money around from one place to another on their balance sheet. So that's one of the reasons why JP Morgan sold off. And ConAgra, which had a pretty decent earnings report, said inflation is eating into our business. So here's the deal. If inflation is going up and a producer, a manufacturer, producer like ConAgra, if they can't, if they can't, if they can't offset the price increases that they're paying for their materials to us, the end consumer, then that means ConAgra is going to take a hit to their profit margins because it's costing them more to manufacture their products. And if they're only selling it for the same price or not able to raise their prices enough to compensate for their producer costs, then they take a hit to margins. And that's exactly why the stock was one of the biggest losers today in the S&P 500. And it's a good dividend paying stock too. But nonetheless, the stock still got hit pretty hard today. And now you have to wonder, how long is it going to take for them to get past this hump that they're in? So if you think it's a good buy, you just have to understand why it's down and that this could take a couple of months or longer to sort itself out. And it might not sort itself out, which could mean that ConAgra could go even lower. This is the risk of investing in stocks when there's inflation. Professor Jeremy Siegel, I don't know if you know who he is. He's a Wharton School professor. He's in the media a lot. Professor Siegel says he's not reducing his stock exposure because he thinks producers will still continue to be able to pass on cost increases to consumers because the consumer is so liquid today because of all the stimulus, because they stayed home for so long and people have saved money. And that's true. The national savings rate is really high right now. But I just don't know how long that's going to last. So we've had a report today, 5.4% on the inflation figure, the consumer price index, the raw number, including, I'm not backing out food and energy. I'm keeping those in it because we pay for food and energy, and that's the real world stuff. Okay. It's up about 5.4%, which is the highest in 13 years, on the back of higher fuel prices, higher housing and rent prices, and used car prices are up about 45% year over year. That's insane. I mean, these numbers are crazy. But used car prices are up so much because it's hard to get a new car because of a semiconductor chip shortage. Semiconductors are used in everything, especially cars. But a year ago was the bottom of inflation. Today could be the peak of inflation. So if we see inflation start to moderate in the July report and August report, then I think everybody will take a bit of a sigh of relief. If we don't see inflation back off enough, then what you'll expect to see is the Federal Reserve, I would expect it to start reining in or tapering its monthly bond purchases of $120 billion a month. It injects that much money into the banking system, which in turn injects money into the economy. And that'll probably be pulled back a little sooner than expected by the end of this year or early 2022 at the latest. That's exactly what Mary Daly said, who's the governor of the Federal Reserve Branch of San Francisco. Okay. And that's really about it for that. So let's talk about real quick stagflation and why people are so uptight about inflation. Look, a little bit of inflation is not necessarily a bad thing as long as we have the economic strength that accompanies the inflation. Inflation is a problem when wages don't keep up with it, because then even with a slight raise, workers are still losing out to inflation. The cost of living is still going up, but their wages aren't going up enough to compensate for that. And that's when demand starts to get sapped. People decide, I'm going to buy less stuff. I'm going to take fewer vacations. And that then hurts the economy. And then we go into a recession. Companies go out of business. The strongest of businesses survive. And then you get a new cycle of new profitability, job hiring, and then the economic cycle kicks in again. We haven't had a serious bout of inflation since, the early 80s, late 70s. I remember as a child during the gasoline crisis, the oil embargo, the Arab oil embargo, sitting in the back seat of my parents' car, waiting online for gas for what seemed like the entire day so that my parents could put gas in their car. My dad could go to work. That's what people see when they think of inflation, because anyone who has lived through inflation today is going to be over the age of 50, if they have any memory of it, right? More likely over the age of 55, 60. So when they see inflation, they saw how miserable things are. So to them, it's like, how could you even take the slightest little bit of chance that we have inflation? It could be so bad. But not all inflation is created equal. And I think that's why the Federal Reserve is being sanguine about inflation. They see it as mostly temporary, or transitory is the word that they like to use. And then we'll get through that part. Some things are going to be sticky, though. I think wage increases are sticky. When people make more money and they go from making $13 to $15 to $20 an hour, that's hard to take back. But the price of a widget that goes from 20 cents to 30 cents, that could easily go back down to 20 cents. Never underestimate the ability for humankind to manufacture and mine more of whatever we want. Got a couple more comments out there. Filippo, what stock just tuned in? You're in for the stock side. I was just mentioning how Goldman Sachs, JP Morgan, and ConAgra all were down today in spite of decent earnings reports. Actually, the banks had blowout earnings reports because of the inflation figures and how it affects the stock market. That's basically what we're talking about. Phil, I don't think this is the peak inflation. I think it'll approach 7%. A lot of people, Phil, agree with you. People far smarter than me. A lot of people far smarter than me agree with you. And look, I'm not saying I'm smart. I'm just trying to just agree with you. It could go higher. If it hits 7%, that is like a ripcord moment. You pull the fire alarm right out of the wall. You know, you push the thing down and you pull the lever out and the fire alarm goes off. The Fed will then be behind the curve way too much. And then the Fed has to play catch up. That, by the way, Phil, and all of you watching, the worst case scenario with inflation right now, the worst case is the Fed, the Federal Reserve, falling so far behind the inflation curve that it has to jack up interest rates rapidly to squelch demand and crush the economy. That is the worst case scenario. Now, I'm not betting that we get it, but based on anyone's time horizon, their age, their stage of life, their life cycle, we do have the portfolio set up to tackle these contingencies of just in case. And that's all you could really do. Okay. Exactly. Thank you very much. And Filippo says, awesome. You bet, man. And I can do full color graphics too. Thank you, Josh. I appreciate you and Andrew. Okay. By the way, Filippo, did you hear me before I gave you a shout out that I'm going to have you on next week to talk about crypto? You're kind of coming in late, but I already gave you the shout out. I already said it. So now I have to do it. So if we have like a big argument over the next couple of days, I still have to have you on. Not that you and I would have a big argument over the couple of days. All right. Thank you guys so much for watching. I really appreciate it. Your time is very valuable. And the fact that you chose to spend some of it with me really means the world to me. I will see you tomorrow.